Communitech helps founders start, grow, and succeed. Our members raise 19% more capital, raise more rounds, hold more patents, and have an increased financial velocity. Communitech member companies scale faster than anywhere else in Canada. So if you're not a Communitech member yet, let's fix that. Good afternoon, everyone. Thank you for joining today's Ask Me Anything session on crowdfunding, the newest member of the capital stack. My name is Christina Wood, and I am the Director of Programs here at Communitech. This AMA will be featured on our website along with past AMA recordings. So today's session will be recorded and you can review it as a resource at a later date. We also want to let you know that we welcome all of your questions throughout today's discussion. So our speaker does have a presentation prepared, but we really welcome the Q&As throughout today's session. So please put them in the Q&A section, and you can also upvote any questions that are also relevant to you. And we invite you to stick around after today's presentation and network at your tables. And you can really learn a lot from some of the peers that you might meet there and how they're using crowdfunding as part of their business. And lastly, please feel free to reach out to any of our Communitech FSMs in order to get any additional resources after today's session. Here's a list of our upcoming Ask Me Anything. So we have blockchain, crypto, and DeFi on November 2nd, followed by scaling your business into the US on November 16th. So please feel free to register for those. Stay tuned for Eventbrite links in our upcoming newsletters. And lastly, I'd like to welcome Peter-Paul Van Hoeken to the stage. And so he is the founder and CEO of FrontFundr, and he will be today's presenter. So Peter-Paul, thank you so much for being here with us today. I appreciate your time, and I will let you share your screen and we'll get things kicked off.
Perfect. Thank you, Christina. So I am sharing my screen here.
That looks great.
That's it. There we go. Yeah, my slide is up. Okay. Thank you. Thanks for the introduction, Christina, and thank you for having me today to talk about investment crowdfunding. So my name is Peter-Paul Van Hoeken, the founder and CEO of FrontFundr. It's really these slides to take you through the investment crowdfunding story, and of course, hopefully get lots of questions. Because that's really why I'm here today to answer your questions. So I will kick it off here, with of course the question, what is equity crowdfunding? Equity crowdfunding is essentially an alternative way for companies to raise capital from a larger group of people, and with the emphasis really on larger. We're talking about the public. So whether you're an experienced a wealthy investor or you're a just started retail investor, everyone can basically invest in private companies, from startups to scale-up companies, through equity crowdfunding. So essentially, it's an online equity crowdfunding is an online marketplace that allows all Canadians and retail investors to invest in private companies that they believe in and that they like to see succeed. And from a company perspective, equity crowdfunding is also a very effective way to increase brand awareness, customer acquisition, and growth in the wider investor community, the public. So it's a great opportunity for companies not only to raise capital, but also to create this brand awareness. It's essentially a combined funding and marketing exercise. So when we have a look at the typical sources of financing, and we start at the bottom of the funnel here, then typically, of course, you start a company. It's heavy bootstrapping, some of your own money perhaps in it, and then of course you go to friends and family, and to as you raise more capital, to accredited investors, venture capital firms, and private equity. And that's really also obviously private equity once you're a large and established company. So where equity crowdfunding really comes in as an alternative funding channel is from really early seed all the way up to venture capital rounds. And I'll get back to that later as how equity crowdfunding is really covering those different stages of financing. So it's really a complementary way to raise capital for your business. So what are the benefits for companies for capital raises of equity crowdfunding? So first of all, of course, as mentioned, you have access to all types of investors, your friends, family, accredited investors, and your brand champions, your customers and other supporters that are excited about your company and want to be part of it. And now they can by investing in your company. It's a great opportunity, crowdfunding, to also validate your business and your product and your service. So so it really helps you to test your product and service. Thirdly, increased efficiency and reduced administrative burden by using a one-stop shop platform. And really what this means is that equity crowdfunding platforms like FrontFundr offer you a way to connect with the wider investor community and transact fully through the platform. So the entire process is essentially digitized and all flows through the platform. So it enables you as a capital raiser, as an issuer, to really focus on broadcasting your message and getting people excited about your company, your products and services, and really run the whole admin side through the platform. And of course, from an investor perspective, it's a great way to learn about your company and to actually complete an investment fully online. And in our case, you work in terms of the campaign management. You work with a campaign coach to really help you from preparation to execution to closing and after service to investors. So throughout the entire process, and it is an opportunity to, of course, sorry, just. So there we go. It's an ability to share your story widely by investing investors to your capital raising, to your capital round, basically. And again, all investors, accredited investors, non-accredited investors, smaller and bigger investors. So typically through crowdfunding, you can invest from as little as $250, perhaps even less, to, well, there is no upper limit really. So it's really an inclusive way to raise capital. So if you launch your campaign with zero audience, you are launching to cricket. And this is a quote from Kirsten Ross, who's a very experienced professional in the crowdfunding space. And this ties into my next slide here. What is an ideal company profile? Now, indeed, you know, a key success factor is having an engaged community, a social media presence, committed investors and customers in the beginning. That's really important. So once you really go out on stage, so you open your campaign on the platform, that you're well prepared and you got immediate traction. So you hit the ground running, and that's really important. So having certainly an initial audience to get started is very important. The raise target. Typically, what we see on our platform is capital raises of at least $250,000 with an expected closing of within 6 months. It could be significantly faster, but companies can take up to 6 months from start to finish, really, to complete the entire process. Now, again, to get that traction, hit the ground running, lead investors is really important. So securing lead investors at the beginning. So once you actually launch on the platform, you can show an immediate traction of, typically we advise around 20%, really sets you up for success and creates this immediate sort of momentum and interest from investors to jump in. And marketing bandwidth, this is a really important point with regards to equity crowdfunding, and that is that you are obviously, or ultimately, you are telling your story, your company, your products and services, and through an equity crowdfunding platform, you can amplify that story, amplify that message. So active marketing support from preparation to execution and closing is really important for a successful capital raise. Now, another key point is sort of generic, is how does your product, how does your company, your products or services fit with equity crowdfunding? And so your story, it's important that investors, that it resonates with investors, that they understand what your solution is and how it can make an impact in our society, how it can really, and also how they can really see an upside from, hey, this company can really is addressing a problem, can become really successful. And so I'd like to see that company succeed, and now I can be part of it by becoming an active investor. And you see a logo there of one of the companies that raised a while ago through our platform called The Very Good Butchers, focused on plant-based protein products, and did a very successful raise on our platform, and in fact are now a public company and listed on actually recently moved to listing on the Nasdaq. So really that story and resonation with that resonates with investors is really important. So from investor attraction, so why would investors invest investing in your company? What are the key considerations for them? Well, from investors, what's happening with equity crowdfunding, that is basically offering opportunities of private markets opportunities, so startups, scale-ups, growth companies to invest in. And through platforms like FrontFundr, it is these opportunities are vetted. So we do screen these companies and make sure that everything is in order. So so you as an investor can properly inform yourself about these investment opportunities through our platform. So each deal goes through a screening and a screening process before it's listed on the platform. Now, secondly, it's another opportunity for value investing. You know, traditionally, the wider investor community, retail investors have been locked out from investing in startups. Only once a startup grows and becomes successful and perhaps goes public, then the public can finally invest. For example, what you've seen with the, the obvious examples like Facebook or Twitter, which are now, of course, public companies. Well, what if you could invest from those companies from the very beginning? And that's essentially what we're doing with equity crowdfunding, and what enables an investor to now get exposure and invest in early stage companies as well. So it's really, equity crowdfunding is turning you as a retail investor into a shark or a dragon, and really invest just like them from the very beginning in promising companies. So a couple of common misconceptions about equity crowdfunding. It's only for early stage companies. Actually not the case. If you look at companies, and we look at companies that raise through our platform, we see really a wide range of companies from really early stage seed capital indeed to later stage growth capital and expansion capital, all the way to private companies that may perhaps be on the path to go public and raise through equity crowdfunding prior to going public. And so you really see now also, as equity crowdfunding is becoming more mainstream, that it's a funding opportunity for companies at a wide range of different stages of development. And the regulations are too complex and limiting. Not really. Is it complex? It is quite complex. Certainly here in Canada, of course, where we actually have 13 securities regulators. So Canada doesn't have a national securities regulator like, for example, the US. So that certainly doesn't make it easier. But the good news is that we now have, actually since September of last September, we have fully harmonized, nationally harmonized crowdfunding rules in Canada. And on top of that, also, that is also why, of course, as a capital raiser, to work with a registered, reputable, trustworthy platform that can help you navigate those rules. And that's really important to make sure that at all times, of course, that you're on side with securities regulation. Venture capitalists just don't like it. Actually, it's now moving to rather the opposite. I think in the early days, and we experienced that as a platform as well, is that venture capitals were initially skeptical about equity crowdfunding, and is it a good idea that the crowds get involved, and what do they know about investing? And we clearly see now a turning point also from the traditional investors, that they sort of recognize like, hey, this is actually a very useful and welcome way to open up investment opportunities to a wider investor audience, and then from a business validation perspective, and again, awareness and marketing a company, it's a great opportunity. So we see that more and more traditional investors start recognize like, hey, equity crowdfunding, this is not some sort of overnight thing that will go away. It will grow and it will become a mainstream part of, let's say, the funding mix. The cap table will be ruined for my next round. That is not the case. And of course, if you're thinking, hey, well, how do I manage 1,000+ shareholders, and what does it indeed mean for my cap table? Now, there are some well-working solutions for that, where essentially you either pool investors or investors become part of a so-called voting trust agreement. So they're essentially one line on your cap table. So you can very well keep it manageable as a company. I can't raise from VCs or angels during a crowdfunding campaign. Yes, you can. And it actually ties into that point 3, is that VCs and other traditional investors, angels, recognize how crowdfunding can actually add value as a complementary channel. So we see more and more companies on our platform that are actually combining multiple sources of financing. So equity crowdfunding combined with angels participating and VCs. In fact, we encourage that, to bring those sources of funding together.
Peter-Paul, there's a question that's come in the Q&A. And so can you share some success stories of crowdfunding for B2B companies, or do we typically see crowdfunding for B2C?
Yeah, that's a great question. There is, in terms of, certainly as equity crowdfunding is an evolving funding channel. Let's say the low-hanging fruit have definitely been companies in the B2C space, where it's easier to understand for investors. So that's kind of where we definitely seen, of course, successes. Now that equity crowdfunding is growing and is becoming more, people become more aware of it and familiar with it, we do see companies that are more in the space of B2B also turn to crowdfunding for funding. And we have definitely seen some successes. What becomes more important for those companies still at this stage of development of equity crowdfunding is to be very clear on who your target groups are. So it may not be really the general public, but if it's, for example, a product in healthcare, or it is or in other industries where it requires some sort of a certain level of understanding of an industry, that you're very aware of who those target groups are. So the answer is traditionally very much B2C, but we definitely see now that also B2B companies start exploring this as a funding channel.
Thank you for that. And then just going to a few of your myths, we received some questions in advance of this session, and definitely, questions around regulations and implications came up a lot. So tax implications, CRA implications. Are you able to speak a little bit more to that?
Yeah, but with regards to, and that's what we've seen in our practice is typical questions around, how do these capital raising rules work, and who from who can actually raise capital? And as I mentioned earlier on, we do have now a harmonized, nationally harmonized crowdfunding rule, which means that that you can raise from any investors, so accredited and non-accredited investors. You can raise per round, you can raise up to $1.5 million per calendar year, and the maximum investment, the investment limit for investors is $2,500 for a non-accredited investor, or if it goes through a registered platform portal like FrontFundr is, and FrontFundr deems it suitable. So basically, based on assessment on the investment opportunity and investor's profile, concludes that this is a suitable investment, then the limit is $10,000. So in principle, through FrontFundr, you can invest up to $10,000 as a retail investor. Now, that's the crowdfunding rule. But of course, there have been also other capital raising rules in the private markets. They're called prospectus exemptions, meaning you can raise capital without having to publish a big pile of paper, which is typically used by public companies to raise capital, called a prospectus. So these are prospectus exemptions. Now, the crowdfunding rule that I just explained is an example of prospectus exemption. Another example is the accredited investor prospectus exemptions. There's also the offering memorandum prospectus exemption, which enables you to raise from anyone really, and the limits are even higher or no limits as opposed to the crowdfunding rules. So what is important to understand is that those rules, we can actually stack them, so we can combine them, and thereby you as the capital raiser, you don't have to turn down any investors. You can take investors that are accredited, so wealthy investors investing larger amounts, as well as smaller retail investors that perhaps want to invest $250 in your company. So it's really, those rules allow you to maximize your investor outreach. Now, another typical question with regards to the capital raising rules is what if you exceed this number of 49 shareholders and you become a so-called reporting issuer? Do I need to then quarterly file with the securities regulators, all of that, or do I become a public company or any of that? That's not the case. You basically, when you exceed the 49, so 50 shareholders or more, you are no longer a so-called private issuer. But other than that, nothing changes really for you. And all you need to do is, when you raise capital through the crowdfunding rule or through an offering memorandum, you have to make sure that you file the actual capital, you file the distribution of securities, which again, typically, like FrontFundr helps you take care of. Let's make sure that all those filings are properly done. With regards to tax application, I can't really speak to that. We don't see, I'm not sure what the particular question with regards to tax is, but it's generally similar to other channels of raising capital. So we don't really run into particular tax questions generally with regards to raising through crowdfunding.
Great, thank you so much. And then with regards to the cap table, you mentioned that, it's not the case that it would be ruined for the next round, but I did have a few questions come in around what are other potential cap table implications that founders should be aware of?
Yeah, so and it is a really important question, and let me elaborate on that. And I mentioned earlier on that basically there are two ways to deal with a larger number of shareholders. And let me start with the one that is not used that much, is actually to use to pull in all investors in a separate entity. And that entity, so it's essentially a company, becomes one shareholder in your company. So it becomes one line in your cap table. It's often referred to as sort of an SPV, a special purpose vehicle, purely to put in place to pull those investors. But you still have to put that entity together. You have to manage that. You have to have a board of directors and all of that. So the typical solution, which we see in 90% plus all the cases on our platform, is to use this so-called voting trust agreement. Now, what that voting trust agreement does is that basically any investor invests in exactly the same security. So let's say typically see companies raise common shares on our platform. So if you have an investor that invests $250, they invest exactly in those same common shares as an investor that perhaps invests $300,000. But the smaller retail investors signs the subscription agreements for the shares, but also signs this voting trust agreement. And what it does is that basically the investor transfers their voting rights to the trustee, which is typically a director or officer, typically it's the CEO of the company, and they vote those shares on behalf of the investor. So the beneficial owner is the investor, but it's voted by the trustee. And what is also included in the VTA, which is important, is a power of attorney. So if you have any decisions where you need unanimous consent from all your investors, you can basically use that power of attorney. So that voting trust agreement enables you to keep your cap table very clean and very manageable, because essentially if Joe Smith is the CEO and a trustee, then Joe Smith holds in trust for, let's say, hundreds of investors their shares. So it keeps the cap table basically very manageable, as well as the governance, for example, for AGMs and etc., because it's a trustee that's voting all the smaller retail investors. Did I answer that question?
Yeah, yes, thank you. And then a follow-on would be, what type of contract is used for crowdfunding? Is it a safe or what type
Yeah,
of
that's a great question. Actually, that brings me just to elaborate a bit on equity crowdfunding, because it's typically referred to as equity crowdfunding, and it is indeed usually equity, but it doesn't necessarily need to be. Perhaps a better term is call it investment crowdfunding, because basically any security, as long as it's considered a security under securities laws, you can basically raise it through crowdfunding. So we see, as I mentioned, we see typically common shares, but we also see convertible notes, safes indeed. We also see safes. So a simplified agreement for future equity, so safe. We also see partnership units, debt, so sort of mini bonds or debt structures. So basically anything that really qualifies as security can be supported through can be raised by companies through crowdfunding.
Thank you for that information. That's great. We do have another question that's come in from the audience. What percentage of investment dollars on your platform do you see coming from investors that have previously invested on FrontFundr versus ones that are activated by the company that is raising? So I guess, do you have a pool of investors that are really active on your platform, or are you seeing more of the traffic driven by the company itself?
Yeah, that's a great question, and important certainly from a capital raise perspective. So and this is what we always tell our capital raisers on our platform, is that you are not outsourcing your funding. So you're not put it on the platform and we give you a call when the money is in. It doesn't quite work like that. It's actually hard work for capital raising. I can speak from experience, because FrontFundr itself is basically a private company, a startup or scale up, and so we did now four rounds through our own platform. So I know, based sitting on the other side of the table as a capital raiser, that it's hard work from start to finish. So an answer to your question is that we typically explain capital raising through FrontFundr as it's a partnership. And so and early on said, look, if you have no audience, you're launching to cricket. So it is important to have an initial audience to launch with. So what we help with capital raise is to mobilize their existing networks, and bring them in on their race. That's one. And then secondly, we of course have an existing user base. We're now close to 30,000 in users, and about a third of those are active investors. We do see the repeat investments growing, which is really exciting to see. So on the investor side of our platform, we see investors that start creating let's say portfolios, and that's great, because they're also diversifying their risk and investing in multiple companies, which they could do. Let's say you have $10,000 to invest, you can make 10 plus investments through the platform if you want. So that's the second channel. It's really us, of course, mobilizing our user base that's continuously growing as we do more campaigns. And then the third one is, of course, to jointly tap new networks and access new audiences, prospective investors that may be interested to invest in the company. And we actively work together with companies to reach out to those communities and to mobilize them and to bring them into the round. So it's really a combination of these three different channels.
It's great. Thank you so much. I think that's it for the questions at the moment. So
Okay.
I'll hop off and you can continue on with your
Yeah,
presentation.
absolutely. I'll just carry on, and hopefully many more questions to come. So moving on from how does the process look like? So as I said, for at least for FrontFundr, we are basically a curated marketplace. So we want to make sure that, and we also have to, because we're a registered dealer, we're supervised by securities regulators. So we want to make sure that that the deals have been screened and also comply with securities regulation, but also because we want to offer opportunity that have been vetted, so investors can sort of be assured that we did all our review of background of founders, that we looked at whether the company is ready, are there any material agreements, etc. So that's really the due diligence and investment review process, and the final step is that each deal before we list it on a platform goes through our so-called IRC, our investment review committee. Now, parallel to that, you as a capital raiser work with our campaign management excuse me, campaign management team to get your campaign ready. So you work with a dedicated campaign coach to plan it out, to think through what are the key messages, what are the key activities we're going to undertake to promote your campaign. And typically you say take time for that rather than rushing through and putting on the platform. Take time to properly prepare that, and we see that's typically 30 to 60 days to really get properly prepared for that. Now, then what we do, and this is part of, again, hitting the ground running, as I said earlier on, before you sort of go on the main stage, which is sort of the public, let's say, platform on FrontFundr, you basically start with a private launch. So what it means is that you as a company, we get everything ready. You have a sort of a deep link. So within you have basically an IP address with that sends investors directly to your capital raise. So you're not launching public in FrontFundr yet. You're sort of dry running it. You're running on the background. And we can open it up to already those investors that expressed interest, and investors through other channels that have already been lined up, to convert them and to work towards that typically 20% traction. And then once we're there, then public launch. So then we launch on the main platform. We include your newsletters, social media, any other promotion. Really is to make as much noise as possible around your raise. And then the actual campaign close, and we as FrontFundr help you with that, take care of that, make sure that all the filings are done, and basically transfer the funds. So during the campaign, investors invest. It's escrow basically in a separate escrow accounts we have for that, and then upon closing, we get all the paperwork done, mainly digital, with the regulators, and then we disburse the funds. So that's an overview of how the typical process looks like. Overall, you're looking at around 3 to 6 months for a typical race from start to finish. Some races are faster if they already have a sort of high degree of readiness and they're already raising, and some may also be take longer. But 3 to 6 months is typically what you're looking at as a total process. So a couple of quick numbers on FrontFundr itself. We launched FrontFundr mid 2015. We're the launching the leading platform in Canada. We've done over 80 capital raises, over 90 million raised, and as I said, we got 30,000 investors, users on our platform, and we now actually closed more than that 7,500. It's now close to 9,000 plus investments through our platform. Christina, are there questions?
Yeah, there's a couple here. So thank you for going over the usual process on this slide. So what should a founder consider ahead of the process? So before applying or making the decision to go ahead with crowdfunding in this avenue, what are some considerations that they should be thinking about?
Yeah. So first of all, given the fact that as I said at the beginning, it's really a combined funding and marketing exercise, right? So if you are purely looking to raise the capital, and you want to do that as quickly as possible, and ideally from only a few investors, and you have no desire to really create exposure around it or around your company really tied to capital raise, you have to think about whether equity crowdfunding is a viable channel for you. Secondly, and tying into that, to do it successfully, it does require time from preparation to execution, all of that. So you do need time within the management team, but also, in terms of support and marketing the actual campaign, you do need capacity for that to successfully do that. So good to think upfront is, okay, am I willing to do that? Do I and do I sort of recognize the value for my company to use equity crowdfunding? And then thirdly, what is the value for to you as a capital raise to get that exposure, to create that awareness, and to turn to perhaps existing customers and turn them into investors. So really, those are important questions to think at the beginning, is whether you want to do that, and whether you believe that's a viable channel. And I do want to add there that as I said earlier, we see more and more. In fact, it's a really a success formula, if you like, is to you can combine it, so it's not mutually exclusive. Doesn't mean I do now crowdfunding, so I'm not looking at any other channels anymore. It's actually the opposite. It's really complementary. It's a new channel, a new way of raising capital in addition to traditional ones. So those are really the things to think through. I would say at the beginning, before you start this process.
So it's really to think about it as you're, putting together what your investment strategy might look like, and looking at all the players and all of the options, assessing how it fits into the overall plan versus, just focusing on whether or not crowdfunding works for you.
Yeah.
There's one other question here from the audience. Is there any due diligence fee? So I'm assuming they're referring to your platform in particular. So is there a fee for that aspect of the process?
And then let me actually, I do have a slide just to make that concrete. I can flip through here to let me address it right away. So you see here an overview of typical pricing of FrontFundr. So you see the crowdfunding, which refers to that startup crowdfunding rule that I talked about, which enables you to raise up to 1.5 million. The upfront, there are indeed upfront due diligence and listing fees. So it's indeed a due diligence, but there's also to get you ready, because as explained, you work with our campaign management team to get your raise ready and all of that. So the typical upfront fees for that are $5,000. And then secondly, let me move to the right. If you use an offering memorandum, which is basically a separate prospectus exemptions, we see companies use that typically that want to raise more than 1.5 million. In fact, if you raise less than 1.5 million, it's not really a reason to use that, because offering memorandum does require an offering memorandum, which is an offering document, and we can help draft that. So it's all templated, but you have to properly do that because it is a disclosure document. So the upfront fees for offering memorandum capital raise, which requires also more due diligence from our end, is 9,000. Sometimes we're also asked to draft the actual offering memorandum, and then you're looking at an additional $12,000 for drafting that. Now that looks, obviously those are bigger numbers, but if you were, again, you would do this if you raise 2 million, 3, 5 million, or $10 million. You would look at an offering memorandum, and these fees compared to drafting it from scratch by a lawyer, you're typically looking at the significant multiple of that. So those are the key different ones. And just on that crowdfunding side, what I mentioned earlier on, we stack the exemptions, right? So we combine the crowdfunding exemption with the accredited investor exemption. So you can raise from anybody you want, really, whether it's $250 or it's $200,000. So that's the upfront fees, and then the trade fees are typically a percentage of the proceeds processed through our platform. And that's typically in the range of 7 and 7, meaning 7% cash commission on the proceeds and 7% warrants. So that's typically what the trade fees are, and then there are additional services like the voting trust agreement that I spoke about. And also good to point out here is that the about 60+% of the raises on our platform are also eligible for investments through registered plans like RSP and TFSA. Many people don't realize, like, oh, that's not possible. That's only what you do with ETS, with funds and public companies, etc. But you can actually also do it in investments in private companies. So this is a brief overview of our fees.
Really great to know. I wasn't aware of that either. So interesting.
Yeah, it's we see more and more investments indeed through because it's typically long term. You put it away. You need to realize that there are typically higher risk investments, but it works really well because it's really supposed to be an investment of 3-5+ years anyway. So.
And these fees, so if you were thinking about your capital stack and you're looking to invest in a traditional way and do crowdfunding, is there a way to combine some of the contracts and agreements so that you're not paying these fees on top of regular legal fees for some of the other contracts? Is there a way to kind of merge everything together?
Yeah, we do definitely see that. So, if the work is already done and we can reuse and we can basically fast track that process, then obviously we can accommodate that. So yeah, it happens that a capital raiser says, I'm already raising through other channel. I went through due diligence, and if we can get access to that, we can obviously means less work for us, so we adjust fees accordingly. It could also be the other way around, that we already do the due diligence and the issuer may go through other channels where due diligence is done, and then we're happy to share that. So yeah, we definitely can look for, all we care about at the end of the day is to help capital raises successfully raise. And of course, the more we raise through FrontFundr, the better. But ultimately, we want to get companies successfully funded. That's really the bottom line.
Awesome. Yeah, any cost savings when it comes to those endeavors are always appreciated on the side of the founder. So
yeah, totally, and we're very aware of that. So yeah, so we definitely accommodate it wherever we can. Yeah.
Great.
Yeah.
Thank you.
I'll just quickly flip back here. So yeah, I talked about, so this was won't explain success stories. Yeah, we've done a number of deals, different industries, different stages of development. We've seen, I mentioned a very good food company. They actually went public now. We see companies also coming back, and it's really exciting to see. We see an increasing number of companies that come back to FrontFundr for follow-up raises. So we're really, helping companies through as they grow and through their financing cycle, if you like. So that's and it's also a really good sign that it works, and companies like raising capital through equity crowdfunding once they've, after they've done it once, and they like to do that, do it again. So a couple of key takeaways on in general on the equity crowdfunding. So equity crowdfunding enables companies to raise from anyone, so the public, small investors, large investors, anyone really. Your customers, really, it's really inclusive for any investor participate. Equity crowdfunding is a legitimate business catalyst. So we also see in companies through our platform, we see in companies that capital raise through other platform and other geographies, is that it's a great way to validate your products and services. And it's also recognized by the wider investor community, including traditional investors as well. Which brings me to the next point, is that traditional venture capital and equity crowdfunding, they're not mutually exclusive. In fact, as I mentioned, it's the opposite. They do go very well hand in hand, and it's exciting to see that the traditional investors are recognizing the value of equity crowdfunding and starting to really welcome it. So that's and this is only the beginning. As explained, equity crowdfunding does not harm your cap table and governance if it's done correctly. And we talked about the solutions to do that, and so we help our capital raisers to get that structured in the best possible way. And ultimately, equity crowdfunding is redefining venture capital. We're truly creating a market for connecting companies with the wider investor community. So it offers you as a capital raiser an alternative to raise capital. And of course, we're democratizing investing. It's really creating an inclusive market on the investor side where everybody can basically participate from the very beginning. Christina.
Thank you for those key takeaways. We do have a question that's come in. Typically, what percentage of the raise do companies that find success spend on promotion of the raise, so on ads, etc.? Do you know?
Yeah, that's a great question. It's obviously there's a range there, but typically, and we're also encouraged, and in fact, I really ask companies like, look, to do this successfully, you need, as I mentioned early on, you need to have some resources to support that, the marketing activities, plus indeed a sort of an out-of-pocket budget, which is typically in the range of, around 10,000. It could be more for larger raises, longer raises. Of course, it's the companies that spending significantly more on that. But that's sort of a range to think of, and also think about it also as a marketing budget, not only for your capital raise. Ultimately, you want to sort of see what does it mean in terms of the cost of raising capital through equity crowdfunding, but it's also a marketing exercise, right? So you can even say, okay, if I invest that in promoting a campaign, I'm actually also marketing and promoting my company and my products and services in general. So that's really the way to look at it. But yeah, you definitely need some funds set aside to support your raise.
Thank you. And then going back to your success stories. So, first of all, congratulations on all the companies that have had success on your platform. Is there anything that makes their success stand out? Like, what did those companies do differently or better than other companies who haven't been as successful?
Yeah, and a great question. And the companies that really have been successful on the platform are those that at the beginning sort of started on the right, with the right intentions and expectations, meaning that we talked earlier on about what would you think about before you decide to raise for equity crowdfunding. So companies say, yes, I need to raise capital, really important, but I also recognize how I can combine this capital raise with creating awareness around my company and products and services. If that's the mindset from the very beginning, that's already a great start, because it tells companies, or it positions you for, and it sort of aligns your expectations also in what needs to happen for a successful raise. So companies that have a clear understanding of the beginning, those are the ones that we typically also see succeed. And then secondly, those success story, and for example, we had definitely success story was a company called Toro Matcha in a matcha drink, so alternative to caffeine, and this company executed really well on preparation, execution, understanding how you're basically, you're on stage, right? You're on stage, or in this case, the raise of FrontFundr. So they're from start to finish. You're there. You can't just sort of go in a dugout, or you have to continuously support your campaign. So they came through with regular updates, messages, key developments. So you always have investors that watch the video and say, I like it, and perhaps they drank it, or so and there are always investors that say, okay, I'm interesting, I'm going to start following it. So those investors you want to sort of convert ultimately and get on board. So second part is really executing well during the entire campaign, and make sure you're there and sharing success stories and all of that. So those are really key elements of a successful capital raise.
Super helpful. Thank you. Another question has come in here from the audience. What will happen to the raised fund if the campaign is not successful? What is the best time duration for a campaign?
Yeah. So typically what we do, and this is also one of the reasons why we're saying, because companies say, oh, let's get going, and I want to get going. And of course, all entrepreneurs by nature are positive and optimistic. So I'd say this is going to fly, it's going to be a success. But it's really important to make sure that you have that traction in the beginning, as we mentioned, right? So having that 20% plus before you come out of the gates, to position the race well for successful completion. Now, what we do together with the company is to set that target as such a level where it's attainable, where there's also a reasonable use of proceeds. So you don't want to set that target too high. You want to ideally exceed that target sooner rather than later, because of course that creates confidence and more investors say, hey, wow, they're already past their goal, so now I want to jump in as well. So so we minimize that risk of not being successful, not a non-successful campaign, by getting that traction, by combining other channels of sources of capital to get that traction, and by not setting that target too high, but reasonable, neither too low, because then it's obviously it doesn't make sense. It needs to be sort of a reasonable use of process. And as I mentioned early on, the minimum raise on our platform are typically like $250,000. And let's say a company wants to raise $750,000, we may set the target at 500, for example, or perhaps less, and then work towards overfunding, getting to that 750. It does happen that the company is not successful. We want to obviously minimize that. If that happens, that means that the funds are basically returned to the investors. All right. So as I mentioned, during the campaign, we escrow the funds, so they accumulate. And yeah, if we don't get to any reasonable threshold to close, we basically terminate the campaign and we return the funds to the investor.
So on that note, are there some, companies or verticals or projects, let's call them products, that aren't really appropriate for crowdfunding, that you would advise those companies to stay away from it as an option? Or, I think you mentioned earlier that, really anyone who's looking for capital could leverage it, B2B and B2C. So just curious.
Yeah, and indeed, and I understand that question. Certainly, if your company is in a B2B technology space, for example, or it's something to think through. And as I mentioned earlier on okay, who's that target group for your company? So if it's for example, if it's a rather complex B2B enterprise solution, for example, it will be more difficult to. It doesn't say anything about the merits of the company or whatsoever, but it will just be more challenging to explain it to investors and get them excited about it. So if it's really a B2B enterprise solution that is not easy to explain, or is really requires a certain level of sophistication to really actually even make adjustment on what it is and whether you should invest in it, then equity crowdfunding may become more challenging and perhaps not the ideal channel. However, how you can of course mitigate that is by again combining funding channels, right? So for example, if it's more challenging to understand for the general investor audience, if you have lead investors and you have significant traction in your raise, and also if, for example, you can disclose who those investors are, or you have, that creates confidence for investors also. Oh wow, that if they're participating, that gives me confidence. And although I'm not the sort of expert in the field, but I actually want to participate in as well. So there are ways to mitigate that, but the more technical and the more in any industry really, the more challenging it may be to reach the general audience. So again, you have to be really clearly define, okay, what is that domain, what is that subgroup in the general audience that we think we can get excited and understand this investment opportunity.
One last question. There's obviously a few different crowdfunding platforms. Are there some that are better suited for certain verticals or certain companies versus others? So I guess the question is, is there do you have any advice for how to choose the best platform for what you're looking to accomplish?
Yeah. A great question. Well, here in Canada, it's in general, equity crowdfunding is an emerging industry. So there are not that many platforms out there, to be honest. But in general, I would recommend, apart from who names, because again, they're not that many yet. But it's important to inform yourself as a company. Is make sure you understand the process. Make sure you understand who you're dealing with. What is this platform's reputation? How do they what is their investor community like? How do they support you with the capital raise? And of course, regulatory side of it is really important. So look at those basically perform your due diligence on the platform. With regards to what platform to go with, you don't really seek, and that's also has to do with the stage development of the industry, verticals. You do see some verticals, particularly in for example in the real estate, where you see platforms that really focus on the real estate projects only. So probably you see obviously real estate related projects going to those kind of platforms. But other than that, the most important things are the things I mentioned, to do your due diligence on the platform. Before you work, before you decide who to work with.
Great. Thank you so much. And that kind of takes us to time for today's session. So that hour went by super fast.
Super fast.
I want to extend another huge thank you to you, Peter-Paul, for joining us today and sharing your knowledge on crowdfunding and how our founders can leverage that as part of their capital stack. So for those of you left on the call and those watching the recording after, if you'd like to find out more information about FrontFundr, or other capital resources, please reach out to your Communitech FSM or myself, and we're happy to get you connected to the right resources. We will share this deck out after today's presentation, as well as Peter-Paul's contact information. So once again, thank you all for joining us today. I hope we answered all of the questions that you had. And again, Peter-Paul, thank you so much for your time, and have a great afternoon, everyone.
Thank you for having me.